Yes guys, welcome back to another video, and in this video we are going to be going over risk management. Okay, so this is a very important video and one that you need to pay very close attention to. So first of all, we're going to be covering risk to reward. Okay, so what is risk to reward? This is just a setup that we have currently which potentially might happen, but when we pull out the buy limit we can basically see the risk to reward ratio is here. Okay, so that's what RR is, if any of you were wondering. So risk to reward is basically how much risk compared to the reward. Okay, so if we're risking 1R, obviously the risk to reward ratio, but we're targeting 2 risk to reward, we're technically targeting double what we're risking. Okay, so we are risking 1R, but then we are targeting 2R, so we are targeting double what we are risking. So if we are risking £1 in this trade, we would be targeting £2 to gain. Okay, so that is how risk to reward works. It's pretty self-explanatory, to be fair, but let's say we were looking to enter this trade. We come down to the fib, we get our entry, we would have stops either below liquidity or below 0.786, and we would target 2 risk to reward fixed. Okay, so that is my model. We are always targeting 2 risk to reward fixed. Okay, the only way that we will be putting stop loss below 0.786 as well is if we have larger from our entry to liquidity. If that number here is larger than 20, then we will be putting stops below 0.786. So we will be putting it in this case here. So 2 risk to reward, we will be targeting fixed. We do not go break even. Okay, a lot of people will see liquidity like this on their way to their TP and think, oh, okay, let's go break even once we sweep this. And then you'll see a lot of the time, well, what I've noticed is a lot of the time price will sweep this and it will have a retracement from there. That retracement could come back down to entry and then bounce from there and hit TP. I've seen this happen many times. So for me, I never go break even, mainly because I don't target liquidity. Okay, we target a fixed 2 risk to reward system which takes out all psychological aspects. So we do not look at any liquidity when we're in a trade. We either hit TP or stop loss. Okay, that is, so it's very simple. You literally target 2 risk to reward and leave the trade. What I like to do is I normally go gym and just take my mind completely off the trade and then check it a few hours later if it's hit TP or stop loss or what it's doing. So in that aspect, it's very good because there is no psychological aspects. We're not thinking, oh, let's go break even here, and then we go break even, get tapped at break even. We're now completely out of the trade, and then the trade goes and hits TP. That feeling will give you a psychological impact as if you lost the trade because you know that you should have taken that profit. Okay, so we never go break even. That is an important thing to be aware of. So another thing that is so important is news. Okay, so this is Forex Factory. This is tomorrow's news. We can see red folders. Okay, red folder for USD, red folder for AUD. So the only pairs, so the only news that will affect the pairs that we are trading. Okay, so USD equals CAD and US dollar, red folder news. Okay, and then for the euro we are looking at GBP and euro, and that is because those two currencies are closely, so the CAD is very closely related to the US dollar and the Great British Pound is very closely related to the euro. Okay, so those are the red folder news that we need to be avoiding. Let's put red folder news. Okay, so any of those red folder newses, we will be avoiding trades. Okay, so we do not take, oh, and JPY. JPY is just JPY, red folder news. But with the yen, most of that news happens overnight, obviously during Asia session. So normally that is okay. So another thing to keep in mind is that we will not enter trades 2 hours before any of these red folder news events. Okay, so if we have, let's say euro, I'll just put here, do not enter any trades 2 hours before any of the above red folder. Okay, so that is very important as well. Let's just put that there so you guys can have a look at that. So we do not enter any trades Why is that? Hang on. We do not enter any trades 2 hours before any of the red folder news. Who's messaging me? So yeah. And then if we go over to Forex Factory, we can see red folder news. So here, for example, there is red folder US dollar news at 1:30 p.m. UK time. So we would not enter any trades after 11:30 a.m. Okay, because within that time, price can sometimes consolidate, leading up to news, and then news can obviously give it massive volatility in the markets. Okay, so that is the rules with when it comes to news. And then let's go on to some other days where there might be high impact news. Nothing there. I'm looking for some euro. GBP, okay. So we can see that there's big GBP, 4 red folders of GBP news. Now, we don't actually trade the Great British Pound. However, the Great British Pound is very closely related with the euro and can impact it very strongly. So to preserve our capital and not take any risks, on this day specific, we would not take any trades after 10 a.m. UK time, okay? And then obviously we've got UK, we've got euro news at 1:15 as well, and then US dollar news at 1:30. So we would not be trading at all after 10 a.m. So we've got 8 to 10 a.m., 2 hours on this day next week. Okay. So those are some examples of when we wouldn't trade US dollar, when we wouldn't trade red folder news. So it's very important for you guys to have Forex Factory up. Check it before you get onto the charts for the day. Check, see when you can trade, when you can't. Because these high impact news events, let me show you some examples in the market of how they can massively affect. So we can see here, really big move. I'm not sure if this was news, but this is an example of how news would move. Okay, 38.6 pip candle in 5 minutes. So if your stop loss, if you were in sales here, for example, and you put your stop loss here, and that candle spawns in, because sometimes they do just spawn in. It's not just a case of this candle moves up slowly like this, really fast in 5 minutes. No, sometimes it can just spawn in up here. Okay, and that is how the news can affect the market. And due to spreads, your stop loss might be at this level here, but because the market hasn't calculated that move quick enough, you might get stopped out up here, and that can lead to blown accounts. Okay, so red folder news is very important to stay away from. So always before the start of the day, you want to be jumping straight onto Forex Factory, checking out when your news is, when you can trade, when you can't trade, when you need to avoid. Okay, so that is very important. And if we are in a trade when there is news coming up, okay, so let's say we are in this trade here, okay, and there is news at let's say there is news here, okay, we would pull out around 10 to 15 minutes before. So we would pull out here and we would just simply accept 1.3R in this case of profit. Okay, so that is the only way that we would pull out of trades early, is because of upcoming red folder news events. Because again, if we had a massive candle just form to the downside, we would get stopped out. And obviously our strategy isn't for news events. Okay, our strategy is simply for the markets and where our technical analysis has determined price is going to go. Okay, so red folder news can just completely disembark, or disintegrate those technical analysis and that idea of where price may be going, because any sort of impact economically that is happening behind the scenes we don't know about, and that can just completely ruin our trade. So it is best to just preserve capital at these times and completely avoid red folder news. Okay, so any of these red folders, CAD and USD red folder news, GBP Euro red folder news, and JPY news, you don't really have to worry about, because that normally happens overnight. Okay, and do not enter any trades 2 hours before any of the above red folder news. Okay, that is very important. So I did just want to show you my live results. So this is this year's results so far, and we can see here that we have had 2 news pulls. So we have pulled out of news here at 0.3R loss. So the trade was floating in around 0.3R negative drawdown, and we pulled out before news came in. And if I remember rightly, this actually saved us from a loss. And then this one was around break even. We were floating in around that area when news came in, and we took out because of that as well. So this year we have had 2 news pulls already. So it shows, you know, they can be common and they can happen, and it's so important to just stay out of those markets when that happens, okay? So we either pull out before news if we were already in a trade that we entered 2 hours before that news, or 2 hours or more before that news. So yeah, it's something that is very, very detrimental in trading and very, very important. So make sure that you guys are very firm with your results, and your... Just need to move this because this is a live setup that we could potentially have in a minute. So yeah, hopefully that helps, guys. Just remember all of this. This is very, very important. Red folder news is so important in the markets and happens every single day pretty much. So let's talk about how much you should risk per trade, okay? So if we are on evaluations and we have an evaluation which is, let's say, an 8% target. So we have an 8% target, profit target. We have 8% max drawdown, and let's say 4% daily drawdown. Okay? So those are what we have as restrictions for this funded account evaluation, okay? So what we want to be targeting, what we want to be risking, sorry, is 2%, okay? If we can risk 2% on this account, then in 2 trades, we have passed phase 1, okay? And then when we're on to phase 2, so this is phase 1, let's say, phase 1. So with evaluations, there is normally 2 phases, unless you get a phase 1 account, but I like to get phase 2 accounts. So phase 2 will usually be a 5% profit target, 5% profit target, and then it's still an 8% max drawdown, and still a 4% daily drawdown. Okay, so those are our accounts. Okay, phase 2 we can risk 2.5%. Okay, and then in phase 1, 2 wins equals pass. Okay, and then we also have 4 losses equal fail. So we are more likely to pass than we are to lose, which is the main thing, and we can get those evals turned over quite quickly. Okay, now depending on how many evals you have, you can risk higher, but obviously be aware that you could obviously blow that account a lot quicker. So that is completely up to you. I can't tell you exactly how much to risk, because obviously for me, I risk a lot more than this. I have 5 to 10 different evals on a go at a time. So obviously it does not matter if I blow one in one trade, etc. But for you guys who are obviously beginners looking at this Zero to Hero bootcamp, this is exactly what I would recommend. Okay, so then for the 2.5% phase, we will win 1 win equals pass, and then you are live funded. Okay, it is as simple as that. So then we have 3.5 losses, or pretty much 4 losses as well, but about 3.5 losses equals fail. Okay, so 2.5, yeah, 7.5. So you lose 3 trades, you'll be in 7.5% drawdown. Obviously max is 8%. So that is exactly what I do. And then 3 trades, 3 wins equals live funded. Okay, and only 4% of creators, 4% of traders actually reach the live funded stage. So this is harder than it looks, but this is exactly what I would do. And then if you are looking to get a 10% account, it would be the exact same thing, but you could risk slightly higher. So you could risk 2.5% rather than, and then these would be obviously be higher. So we'd have 10% profit target, we'd have 10% max drawdown, and we would have 5% daily drawdown. Okay, and then still the same thing is the same. 2 wins pass, 4 losses fail. So no matter what account you get, you want to be looking to pass it in 2 trades and fail in 4. Okay, so this is exactly what I do. And then if this was obviously, you'd still have a 5% profit target, but then you'd have 10% max drawdown, and you would have 5% here, and you'd still be targeting 2.5%. So it's completely up to you as to what accounts you use. This would go down to 4, wouldn't it? Or go up to 4. So yeah, it's completely up to you, but this is exactly how I would treat evaluations, okay? So yeah, pretty simple one. But then once you are live funded, we want to be risking 1% maximum, okay? 1% maximum. And every time you are in slight profit, you withdraw those profits. And whether you want to reinvest that into funded accounts, which is what I would recommend, then do that. But on live accounts, you only want to be risking 1%, okay? So when you're on a live account, it will look something like this. Live account, okay? 1% risk, and then all of these would be exactly the same. That would be deleted, that would be deleted. So then you have 10 trades before you can fail. So you're never going to fail this account really if you treat it with, if you have a profitable strategy, you're never going to get 10 losses in a row realistically. I think the most losses, well, not I think, the most losses my strategy has had is 5 in a row in the last 4 years of data. So with this strategy, you won't be hitting your max drawdown unless you're risking more than 1%. So yeah, that is it.